The tariff escalation between the U.S. and China casting a dark cloud over shares of Apple. The iPhone maker, being heavily reliant on China for its manufacturing, would face severe impacts from tariffs, especially if they stay at that current 145% rate from the U.S. to China. Our next guest, however, seeing rising odds of some relief for the tech giant. CFRA Research senior equity analyst Angelo Zino joining us now to discuss. Angelo, there's been a lot of speculation about what these tariffs could do to iPhone prices here to the U.S. There's been reports that Apple did a special airlift through via India to get some of its iPhones out ahead of the tariffs. What does this imply for sort of the timeline of what we could see for iPhone pricing?
Yeah, I mean, and thanks for having me, Julie. But when we kind of think about this, I mean, in terms of pricing, we actually don't think there's going to be a hike in pricing across Apple's installed base until their next gen phones come out, so this fall, back in September. And that's just typically how Apple handles pricing increases. You typically wait for that next gen device launch before increasing, and we think that's going to be the case again. We do think that if there's going to be a tariff situation like we're seeing now, the best time for it to come for Apple would be during your seasonally slower period, which is what's happening right now. Typically, the June quarter is your trough quarter. So from that perspective, if they've built up enough inventory and they can leverage whatever capacity they have in India, at least for their U.S. demand, they should be okay at least for a couple of months here. But clearly, as we start entering the fall months and into the holiday selling season, you're going to need to tap into that China capacity to meet, the higher expected U.S. demand. And at that point, there is going to be higher pricing, we think, irrelevant of what the tariff number is going to be, because it's at least going to be 10% and potentially a lot higher depending on how the U.S.-China dialogue goes.
Angelo, do you think Apple could ultimately secure a special tariff exemption, a special tariff carve-out like they did during Trump 1.0?
Yeah, I mean, so we've increased the odds, right, to 50% from 20%, and we really changed and increased our probability based on Wednesday's events. When you think about Wednesday, basically the U.S. administration reduced or eliminated or postponed the reciprocal tariffs. And essentially has a flat 10% rate here outside of China, whereas they actually increased the China rate up to now 145%, which really actually makes no sense for Apple to even touch that capacity there. So when you start thinking about the situation that has evolved there, it changes the competitive landscape in many respects, because right now you've got a company like Samsung, which is their biggest competitor out there. Most of their operations and capacity is in Vietnam, India, as well as South Korea. So in many respects, they've got a competitive advantage, especially as you start entering the holiday selling season here from a potential pricing perspective and cost perspective relative to that of Apple. So it'll be interesting to kind of see how the dynamics, kind of change here over the next couple of weeks and months. But if you're talking about a company in Apple, which is essentially, the crown jewel for the U.S., and they're committing $500 billion into the U.S. economy, helping to prop up kind of the manufacturing capacity in the U.S., a lot of it through funding across the supply chain to the likes of Taiwan Semi so they can build their plants here. You almost have to think that at some point in time, you're going to have to give Apple an exemption, but that's just our view.
So bottom line, you think Apple has a good argument for that exemption. Whether or not the White House buys that argument, I guess, is another thing.
Yeah, no, absolutely. And again, we think when you start thinking about kind of the added stress that's essentially put onto Apple kind of post Wednesday's events, now kind of, having a disadvantage from a competitive landscape, we just think it makes more sense or increasing sense to offer them that, that exemption.
Angelo, do you think domestic iPhone manufacturing, U.S. iPhone manufacturing, is that financially tenable?
Yeah, that's tough. I mean, any type of manufacturing for any goods on the chip manufacturing side of things and the hardware side of things, as far as the tech ecosystem is concerned, is very difficult. We all know about the slip up with Foxconn and them trying to build a $10 billion plant in Wisconsin back in 2017 and how that never came to fruition. Clearly we've seen some, like the likes of Taiwan Semi, find some success here. So we think we think Apple can move some supply chain manufacturing or push some of that here into the U.S. in terms of getting some of the other suppliers out there to build bases here. But overall, in terms of the assembly, testing, putting together building facilities as far as iPhones is concerned, it's just a stretch to us. I mean, from a cost perspective, it does not make any sense.
Angelo, I want to switch gears and talk about chips and the effect on chips of this U.S. and China trade war. We saw a steep drop today in shares of companies like Texas Instruments and Intel because China is saying that its tariffs that it's imposing on imports to China will matter where the country of origin is. So, for example, those two companies make some of their chips in the U.S. You didn't see other companies like NVIDIA or Qualcomm and AMD affected. In fact, they went up. How are you thinking about how to navigate the chip landscape with these very sort of specific regulations that are being put on each other?
Yeah, no, that's a great question. I mean, when you kind of just look in light of the events today, you clearly the names that, or at least the names that seem like they've gotten the reprieve are the leading edge companies. So your NVIDIAs, your AMDs, your Qualcomms of the world, because they are fabless companies and the manufacturing is based out in Taiwan there. And then your trailing edge type nodes, specifically your analog based companies, your Texas Instruments, ON Semis, Microchips of the world are the names that you would think would kind of get more pressured here. I would say, listen, when you think about China specifically, they are ramping up their domestic manufacturing industry there, and specifically where they are able to pump up a lot of volume is on the trailing edge side of things because they have the capacity there. And it's still very difficult for them to stay ahead of us or even kind of get anywhere near us in terms of the leading edge nodes. And they still need our chips, our GPUs, as well as other leading edge chips. So it makes sense not only from a chip origin perspective, but also from the perspective, from a strategic perspective for China. And whether or not that kind of was taken into account and all this remains to be seen. But from that perspective, we continue to think you want to be tethered to those leading edge companies that are more kind of tethered to the more profitable areas of the market until we see a sustained recovery in more cyclical markets like autos and industrials, where you could then start playing some of the more trailing edge nodes. But there's just too much risk at this point on that side of things, where we would continue to focus on your NVIDIAs and Broadcoms of the world.
And that's because, Angelo, despite the near-term sort of the drama, the volatility, you still think, obviously, that big AI trade and trend, that remains long-term intact?
We think it remains long-term intact. You may see some bumpiness. You may see some cuts here and there. But ultimately, when you kind of think especially when you look at the valuations of these things now, Broadcom, NVIDIA seeing significant pullbacks, we do think this is an opportunity, especially if you're a long-term investor, to get more aggressive on those names.